perhaps in Malaysia and the region. And I'd like to start that by posing this question to Lorraine. Thanks.
Yeah. Thanks, David. I was expecting this.
Yes, she was.
So, yeah, it's. I will start by saying that we're, further to what I mentioned about next year being more difficult, we still nonetheless have factored in upside from a year to end of the year basis. So anywhere from about a 5% to a 15% sort of range is what we're looking at. Having said that, we're expecting small roller coasters next year. So there could be times when it's going to be down and times when it'll be obviously going up. Our opportunities, the way we see it, the best domestic market is in the region is still China, I think globally as well. So I think for us, the opportunity on a regional basis is still going to be the H shares, which are China-listed entities in Hong Kong. For the export story, our preferred export story, as that sector, external sector picks up, would be Korea. Korea is still trading always generally within the lower end of their valuation range. Secondary markets would be Indonesia and India. I think at this rate, because Indonesia has gone up so much, I think our preference is probably on a secondary basis to be India. We are generally negative on Japan. They have a double-edged sword because the yen has been going up so strongly. So we think that that's going to still contain any sort of uptick there. Within, on a sector basis in Malaysia, we are overweight the banks, healthcare, and materials. We also do have a somewhat quite optimistic on the energy side on a regional basis. But for Malaysia, because most of the companies here are oil and gas services companies as opposed to upstream players, the big upstream player here is not listed. We do expect some challenges on the margin side for the services companies, potentially from their clients. On the whole, because there's such a valuation gap between the blue chips, large cap blue chips here versus the rest of the market, most of our preferred stocks are actually in a mid cap, sort of second liners is generally what we're going for in Malaysia.
Sorry, may I just ask, Malaysian market relative to Asia, if you had to put your money, would you put in Malaysia versus offshore?
As I mentioned,
not that I'm encouraging you to take money offshore.
The excitement level is still the highest, I think, for the H shares, for the China issues, and I think our preference is still with those. Yeah.
Okay. I'd like to pose the same question to Pankaj.
Thanks, David. I think Lorraine has given a very wide answer. Can we move to Lucky Draw?
Okay, let me ask.
No, I'll answer that. Okay, I must say, at the end of it, there are opportunities everywhere, all right? Even in the Malaysian context, there are opportunities for investors. At the end of it, you have to ask yourself, what is your risk appetite? All right, do you go for value stocks? Do you go for growth stocks? There's always, it's very difficult to find a stock that gives you both value and growth at the same time. So at the end of it, you have to structure your portfolio to make sure that you are well represented, in the two asset classes, whether it's value or growth. If you talk about value, basically you look for dividend yielding stocks that gives you good steady returns, where you understand the business model well. If you talk about growth stocks, then obviously you talk about some of the themes that are in the market. Perhaps commodities would be a good theme in the market, including the plantation names and oil and gas. All right. So that, and as well, even the banking sector in Malaysia, not the first tier banking stocks, but second tier banking stocks do look more attractive vis-a-vis the highly weighted stocks in the index. So in that sense, I think, well, if you look at it that way, there are still opportunities in the equity market in the Malaysian context.
Let me pose a different question, Pankaj. You are very diplomatic in your answer. So let me challenge that. If you had an opportunity to short this market, would you short this market versus going long?
I will short.
Okay, thank you. We now know his position. But of course, we don't have the opportunity to short this market, we would get in trouble with the authorities on that. But at least he's quite right. I think there are many fund managers are compelled to invest, and many fund managers would probably not totally disagree with where he would place his money at this juncture. Sorry.
Yeah, David, if I may just add, the world of investment has grown to be more complex with financial engineering, technology, and so on. Now, if you are investing in equities, there is also another way of protecting your principal through structured investment vehicles like structured products, structured deposits. Now, over at our side, we have structured 2 investment teams, one namely for our Indonesian office. Now, what we do is that we take a macro view, index per se. We think that Asia is going to outperform US. That's why we structured a 100% principal protected deposit with investment returns linked to the outperformance of Hang Seng Index against US Dow Jones. Now, as long as the Hang Seng Index goes above Dow Jones, the difference will be paid to the investors as a source of returns. Okay? And of course, if the view doesn't materialize, at the end of the tenure, which if I can remember correctly, is 2 years, the investors will get back full principal. There was one team that we structured. The other team that we structured was that we play on a global recovery story. We select stocks which rides on recovery story, namely stocks that are linked to commodities, and not only in Malaysia, but linked to Brazil, Russia, India, and China. So naturally, it's difficult for us in Malaysia to get out, to invest in all these big countries in a very meaningful way. We can do that via structured product, via structured deposits or structured unit trust. That is, we link the investment returns to these kind of markets, or we link the investment returns to this kind of strategy of outperformance of, say, Hang Seng against Dow Jones. So there are also different alternatives to play the stock market while preserving your capital.
Thank you for that, Julian. I just like to ask the floor, actually, how many people have participated in the structured product arena? Put up your hands. Put up your hands. What, no one? Really? Goodness.
I think there's been quite a few structured unit trusts issued mainly from M Investment under the brand of M Mutual, as well as CMB, Maybank, and so on. It can be in the form of structured unit trusts or structured deposit or FRNIDs. Maybe without knowing, you could have invested some of your monies in these kind of instruments.
Oh, okay, my only comment on structured products is that, of course, in the whole world out there, it sort of blew up. Yeah, it's everybody heard of accumulators. I think in Singapore they call it IQ later. But anyway, no. I take Julian's point. There is a role for structured products in one's portfolio. The problem very frequently, maybe it's the way it's sold, maybe the way it's bought. People do not think in terms of a portfolio approach. People think in terms of okay, this sounds interesting, that sounds interesting, rather than think about what are some of the underlying risks and how does it affect you should things do not turn out well, but there's certainly a role to be played for structured products. Actually, I'd like to pose a question to Julian about the fixed income side, because I was just talking to Pankaj before coming here and asking him, it's a strange environment where equities and bonds are sort of doing well at the same time. I think Julian had that beautiful quadrant, talking about those quadrants. I find it strange that, for example, in the United States today, if the world indeed is, if equity markets are telling, what signal are equity markets telling you? We are experiencing a V-shaped recovery of some sort, a V-shaped recovery. And I can show you charts where, ISM, even some of his Pankaj's indices, they look pretty much like a V, okay? Equity markets are saying it's going to be a V. The bond market, on the other hand, the 10-year bond yield is pretty low. If there's going to be a V-shaped recovery, if there's going to be a strong economic recovery, surely it should be much higher. is this a transition period we are going through, Julian, that both are doing well at the same time? And then after that, that breakout, which is right? Which is right? Is equities right? Because if equities is right, better get out of the bond market.